Good morning and welcome to 3 Minutes on Markets and Money. It's the post-election hangover day. As we talk about the markets this morning, markets are trying to reposition themselves to the outlook of not who potentially is going to be president, but the fact that we are probably going to maintain a split Congress. Now, that's good for the markets and changes the dynamic of this whole idea of a reflation trade. Prior to the election, as we were running up, we saw basic materials performing much better than technology as an example because of this idea of this reflation trade. This reflation trade, of course, more stimulus, more direct injection to the economy, the transfer from petroleum-based energy to clean energy, etc., all weighing on different areas of the market, primarily weighing on technology, again, giving a boost to areas like basic materials. However, this morning, that trade is now changing because despite whoever wins the election and is president, if the GOP remains in control of the Senate, which seems to be the case at this point, then this changes the dynamic of the potential to pass these more extreme policies, bigger stimulus packages, infrastructure spending, etc. So this changes the dynamic and pushes back into where we're starting to see the trade and technology. This morning, technology will be up over 3% at the open. And again, very oversold here on a money flow sell signal. That will turn up today. We'll start to see money flow coming back into technology stocks. That's also going to potentially weigh on areas like utilities, which have been performing better. Money will come out of that safety trade potentially back into an area of growth like technology. Now, why technology here, particularly big tech, right? Apple, Microsoft, Amazon, Google, the trades from earlier this year. Why that trade? Because these are companies that can generate earnings in a weaker economic environment. With a pickup in COVID cases, both in Europe as well as the U.S., it doesn't really matter if we mandate lockdowns back in the U.S. Simply voluntary lockdowns by individuals can curtail consumption and also slow economic growth. And without a big stimulus package coming along, that also keeps the Fed at bay at this point in terms of doing more stimulus for the market. So as we head to 2021, this is going to make the markets a bit more challenging, considering that we have a very high level of valuations and stocks really kind of across the board, as well as the fact that earnings are much weaker now than they were previously in 2019 and will continue to be that way all the way through 2021. Just to wrap up though, with the markets now consolidating now for the last couple of months heading into the election, very much in line with normal historical election patterns, weakness in September and October, strength in November and December, and we will turn up our money flow buy signal here today or tomorrow, and that will help give some lift to the markets here over the next month. So a retest of previous highs is likely. If we get back above the 50-day moving average, that will also give more boost to stocks in the short term. So we'll be removing our hedge today, adding exposure back to our portfolio accordingly, and trading for the rest of the next couple of months. Have a great day. That's 3 Minutes on Markets and Money. We'll see you tomorrow.